Doing? Hey, Jonathan. Hey, Humble Hands. How y'all doing? I got keys. Oh, oops, we're live. Okay. Oh, do not drink water after your kids. Oh, my Lord. Why did that taste like toothpaste? That was why. Oh, that was nasty. Okay. Hey, y'all who are streaming from Facebook, YouTube, LinkedIn, Twitch, Twitter, IG. Okay, awesome. Let's take a look at what's going on with Carnival Corporation. Okay, and we're going to look under the hood at this and see what's going on with it, because I posted about this company yesterday. Their stock shares are currently under $9. And so I asked everybody, I said, well, what are your thoughts around this? What do you think is, going to happen with the company? Do you think this is a buy, or do you think this is a deny? So real quick, for everybody who is tuned in, can you let me know via chat or via the comment section? Can you let me know, do you think Carnival is a buy stock or a deny stock? Comment real quick and let me know. I want to see where we're at before I start digging deep into this. There we go. All right, let's see what y'all think. Okay, the real mom said deny. Whitney said buy. Rob said buy. Okay, so we have a lot of buys. All right. So some of the reasoning that I heard why people thought it was buy, even on YouTube and Facebook, people are saying buy. Okay, so some of the reasons why I've heard that people say you should buy into this stock is because they say buy low, sell high, right? We want to make sure that we are trying to take advantage of the sales that are going on in the market because of everything happening with the recession, with the inflation, with the stocks are being affected by war, who are being negatively affected by war. Now, for those of you who are saying buy, my question to you would be, have you looked up how much debt the company has? And have you looked up the valuation of the company? Okay. So these are important things to ask yourself, because if you haven't, of course, the price point is going to look amazing. You're like, oh man, yeah, $9 a share. I just saw somebody said they bought in at $6 and some odd change a share. And so that looks great from a budget perspective. That looks great from a I'm going to load up on shares perspective. But when we're really looking at under the hood of a stock, there's other things that you have to take into consideration to determine, is this going to be a good, solid, long-term investment? Or is this something that I should kind of wait out before I determine to see if I should get into this? Because could this company potentially be going bankrupt in the future? Okay. So for those of you who said buy, I want you to answer this again in the comments. Have you looked up the company's valuation versus their debt? Put yes or no and let me know. Have you looked at the company's valuation versus their debt? Or have you just said, this seems like a really good buy-in because the shares are so cheap and I've never seen them around this price point before. I've never seen them fluctuate between $6 to $9 before. Okay. All right, great. So that's something that we're going to take a look at because it's important. So for those of you who didn't know, okay, Carnival Corporation is comprised of quite a few companies. I always thought it was just Carnival Cruises, but apparently it is not. Okay, so we're going to talk about that first. So Carnival Corporations is comprised of Carnival Cruise Line, Princess Cruise Lines, Holland American Line, Costa Cruises, Windstar Cruises, Seabourn, and Cunard Line. So some of the benefits are, if you have more than 100 shares with this company, they do give you certain perks when you travel, which is awesome. Like, hey, yep, I travel with them anyway. I'm going to make sure I get these, these drink packages and all this stuff because I want to take advantage of this low price point, lock it in because I know I'm going to travel anyway, right? Okay, cool. Based on that, I can see the logic, but I'm looking at your responses and people are saying, no, I was just going based off of the price. It seems like it might be a good buy-in. Well, Carnival Corporation has a valuation of $12 billion. Okay. Their current debt is at $9.5 billion. So they're not projected to get out of debt until around 2025 if business goes well. Y'all, I'm gonna have to grab some tissue. My allergies, y'all know how they are. Hopefully they'll stop. But I get excited and then everything just opens up. Okay, so they're projected to get out of debt in 2025 as long as business continues to do well. Now, some of the things that are really fighting against them right now is the same things that I just listed that made their shares drop for you all to picture them as being on sale, right? Inflation is kicking them in the butt. You have the wars, which is causing oil prices to go up, which is kicking them in the butt. The pandemic, they still haven't recuperated from that, right? So there are things that are really piling on them that's making it harder. And then another thing that they did to try to fight everything that was going on was they offered extremely discounted prices on their cruise lines. So when they were trying to get people on the boat, they're like, look, we got to save face. We just got to get people on the boats. Let's go. Like, this is getting ridiculous. We're not making our money back fast enough. That actually ended up hurting them because although they were making some money, it wasn't nearly enough to push them in a positive direction. So this is where I'm asking you, do you think it's still a buy or do you think it is a deny? Me personally, I'm going to first share my screen over here on YouTube because I want you guys to see some of the financials of it. You know, in the stock class that I did teach, which is a class that's available to you guys, is self-paced now, but I did teach it live 3 times. This class, we talked about understanding the fundamental analysis, the technical analysis, understanding what you're looking at when you're wanting to invest in a particular stock and why you're choosing to invest in them. So it's a phenomenal class, you guys. It's a really fundamental breakthrough, a really basic, easy, understandable run through of the stock market and how you're able to buy into shares, sell them, all those things. Okay. So let me share my screen with the people who are tuned in real quick. Present. I'm so tired. I wonder if I'm coming down with a cold. I hope not. That would be tragic. Okay, let me see. Windows tab. This one. Okay. So what we're going to be looking at right now is the financials around the company. Okay. So if you are tuned in on YouTube, what you're looking at is the summary. We can see that at open, okay, at open, the shares were $8.34. The day high, they went to $9.07. And then at the close, okay, at the close, they closed out at $8.89 a share. Now, the 52-week high. So over the past year, the highest that these shares have gone to has been 25. It says 25.29 per share. So when the pandemic originally happened, a lot of companies took a huge hit and people were like, oh, it's time to load up. It's time to get in this space. But what we didn't know is that travel would be so heavily impacted that the shares would drop to what they have. So for those of you who caught that initial up push, had you been studying your technical analysis, you've been able to determine when it's time to get out of the market before everything that eventually started to transpire with the recession and all the other things that have been going on with the economy. Now, if we're looking at it from an earnings perspective, all right, let's take a look at the history of Carnival Corporation's earnings. Quarterly, they're doing great. Quarterly, they had a wonderful quarter. What is this? Q3 actually in profit, okay? But Q1 of 2020 through Q1 of 2020 through Q3 of 2022 has all been negative. They're not actually projecting to have a profit until Q3 of 2023. That's a correction. And I hope you guys can see that. Let me see if I can zoom in for you. For those of you who are tuned in, can you see that now? Okay, perfect. So you can see this right here. Q1 of 2020, they were down 0.22, what is this, million? And then all the way into Q3 of 2023, still no profit, or 2022, still no profits. As we push into Q4, they are showing less losses than the previous quarter. However, it's going to take them at least like a year and a half to make back some of this money, y'all. Okay. So if you're going to invest into Carnival Corporation, you need to understand one thing. They're not paying out any dividends. They do give you benefits as far as traveling with them. And this is going to be, you're welcome, Angel. And this is going to be a long-term hold. We're talking a 5 to 10 year play in the travel industry. So if you're somebody who's like, I want to, invest into these cruise lines because I really want to see my money grow, understand that you're potentially looking at a 5 to 10 year game plan with this particular stock. Whereas if you would have took that same amount of money and invested it, let's say, into an index fund or invested into another type of high return vehicle with this same type of game plan, you may be potentially looking at greater returns, safer returns, okay, than what you would be looking at investing into something like this. My concerns lie in that in the past 12 months, 100,000 shares of Carnival Corporation have been purchased, but 103,000 shares have been sold. So if you're currently invested, the suggestion from analysts, not just myself, is to hold. If you're going to invest, understand the time period that you're looking at when you're investing into this particular stock. This is not going to be a 1-year situation. You're talking about moving past the recession, at least a 5-year game plan with this. Okay. Now, I did read that it said that their price shares could reach $12.41 by this time next year. But that is all contingent upon how the economy is performing, what that looks like. As you know, the Feds did raise by another 0.75%. There's more tightening to fight inflation. Okay. There's still the expenses that are continuing to go up. Carnival is still fighting an uphill battle. And so this is going to be a difficult road ahead for them. Now, if you're wanting to invest into a cruise line, Royal Caribbean is honestly a preferred cruise line to invest in. Their financials look stronger, even though Carnival Corporation does have the largest amount of cruise ships in their fleet or in their company compared to any other cruise line companies. So there are good things, there are negative things, there are favorable things, there are things that I'm just like, I don't know. If you get invested into it, just know, you guys, that if you're buying and holding for a while. Okay, so if that's something you're prepared to do, then go and load up on your shares, get the benefits of having the 100 shares and taking, getting those cruise credits. A good exit strategy for you, if you're not planning on holding on to this for a very long time, would be to try to get out around, maybe the $12 mark with this particular share. So we should buy. So Daniel asked, so we should buy. So my personal recommendation, now y'all can go against me, it's cool. What has me reserved on a buy with Carnival at the moment is that their valuation is at 12 billion, but their debt is at 9.5 billion. That's too close for comfort for me. So I would need to see how they're going to kind of weather in this space for me to determine if I'm actually going to buy into this company or not. It's just uncomfortable for me. If you're okay with the risks that are involved with that, then by all means go ahead. But they've literally lost over like 50 some odd percent of their shares values within the past 2 years. I think it's closer to like 60 something percent. So that has me concerned. A lot of people are looking at it as a potential sell and saying that, yeah, this is good. Like hop in, hop in. I'm not comfortable with the fact that they're 3 billion short, if I'm not mistaken, of not having any money. That doesn't make me feel very good. Okay. So what I would do is I would continue to watch this for a little bit longer before I made the determination to invest into it. Once I do make that determination, if I do, I will let you guys know, but I'm not letting you guys know to say, hey, go invest in it because I did. I'm just going to let you guys know that I took some time. I looked at the company. I read deeper into its valuation. I read deeper into, what the company is looking like from a technical standpoint, and I decided to invest into it. Now, what I can say is I will go and I'll do a quick markup on Carnival Corporation. So let me go in here real quick. I hate that. I don't know. I think my daughter put toothpaste in his water. It tastes like I'm drinking mouthwash. Okay, let me see. I'm going to go and do a quick markup on it. So the ticker for this is CCL. Now, you guys give me your opinion. What are your thoughts? Do you think you should wait? Do you think you should just going to get in now and weather the storm with this? Do you think that the company could potentially face some bankruptcy within the next few years if they don't tighten up? Like, what are your thoughts? I'm really interested in seeing what they are. Mary Graham said, wait. I see you, sis. Let me post your comment. Mary Graham said, wait. Okay. Neil asked if she should buy. Okay. Put this banner up here. All right. So people are still saying long-term hold, get in now, buy now, buy now. I want to know your reasoning. Tell me your reasoning for saying buy now. Because a sale is not a good enough reason. A sale is not a good enough reason to say get in the market, especially not when you're talking about individual stocks. You do know that if $9 is split in half, that's half of your investment that's gone, right? Like when you look at it and you're saying, when you look at it and you're like, oh, this is cheap, I'll hop in. If that $9, if the market continue, if that particular company's shares continue to go down, you're losing half of your investment. You know that, right? I mean, technically, you don't lose anything until you sell. But I just want y'all to be clear. Don't look at it and say, oh, this is a sale. This is the reason why I'm going to hop in here. You got to understand where the company is positioned financially. Just because they used to be a big head honcho doesn't mean that they're going to remain that. All right. I don't know if any of y'all have taken Carnival Cruise Lines lately, but their upkeep is not the best, okay? And their standards have shifted. Carnival Cruise used to be a really high standard cruise line when I was a kid. Like I was like, oh, this is nice. This is nice. Now it's not like that anymore. Their financials are not doing what they need to. They are not doing what they need to do. So I do have my concerns. Yes, they do have a good, yes. So long term, from the past, they do look good. But let's take a look. Let me mark this up real quick. I hope I'm not getting sick. I got a trip to take. Let me see. Let me look them up. The ticker is CCL for anyone who's asking. It's the cheapest vacation for the money, and people will take advantage of the deals. But okay, so if people are taking advantage of the deals, that's good. But if they're not making enough money to get out of debt, it's bad. Okay. Somebody said that's exactly why I said I'd pass. They are not doing anything new to bring in new customers. They don't have the money. Just came back last week. Yeah, they don't have the money. Honestly, if we're being transparent, they have the money. I mean, they have, a company valuation of 12 billion, but when you're in debt, $9.5 billion, that's like saying you have $12,000, but you own your last 3,000 and you got to pay somebody else back $9,500. You're struggling. You're hurting right now. Okay, Angel said, I bought low, but I'm going to wait until at least double and take that to Royal. Okay. I think I'll wait to invest. After knowing this, I'm going to wait and watch and see what they do. So I'm going to share this with the people who are tuned in over here on YouTube. I want you guys to see this from a different perspective here. I just want to bring you information that I don't know if you're exposing yourself to. These are the things that you have to start studying when you're talking about individually investing into stocks. One of my friends, Better Wallet, he had a great suggestion. Of course, I totally 100% agree. 90% of what you're invested in should be into some sort of low risk, high return investment, such as index funds, mutual funds, ETFs. That other 10% should be allocated to more riskier investments. Individually investing into stocks is a very risky game to play. You have to know what you're looking at. You have to understand fundamentals. You have to understand technicals. It's very important. The fundamentals will let you know if this is going to be a short or long-term situation. It'll let you know the health of the company. You'll be able to see what you get to walk away with as a shareholder. If anything goes wrong with the company, you'll be able to see if they're broke. or not, or if they're going broke or not. Okay, you'll be like reading the news, understanding the balance sheets, the income statements. Okay, these things are important. But then you go to the technicals, because the technicals help you understand your exit strategy. Okay, it helps you understand your exit strategy. Trading is risky, yes. Any form of investments are going to be risky. That's why we encourage you guys to have mixed portfolios, have some bonds, be invested in the indexes. Like, don't solely have all of your investments tied into individual stocks. It's not a healthy portfolio. If you have the majority of your investments are into stocks, you do not have a healthy portfolio. Okay. All right. So let's take a look at this. For those of you who are tuned in on YouTube, this is CCL. That's the ticker. It's Carnival Corporation. Okay. And so what we're going to do is just a simple markup on the chart with our support and resistant levels. And that's going to help us determine some things, hopefully, because they're post stock is just hurting right now. So right now what I'm doing is I'm pulling everything to the right, because I want to get all the history that I can on this particular stock. I'm going to change it from the day, and I'm going to move it out potentially to the, I don't know how long they've been in things. Let's move it out here. All right. So we can see this goes all the way back to what, 1988? Lord have mercy. Let me stretch this out a bit here. And I pull the stock up. Oh, Lord, come on now. Don't act up. Don't act up. So I'm getting an overall picture. Right now. So we can see the company from 1988 all the way until present day. I just have to stretch this out a bit. This is the one thing that I don't care for with TradingView, is how you manipulate the charts and how you like move it, but it's fine. For the YouTube channel, it's bebougie.com. Or I'm sorry, not bebougie. Oh, do you hear me moving in my chair? You hear me moving in my chair? Okay. Yeah, no, it's me moving in my chair. That's so funny. All right. So right here, we're looking at this red candlestick right here. This is current day. All right. So we're just going to go ahead and create us some levels, and we're going to look at what's going on with this. For those of you who are watching on Instagram, I'm going to see if I can turn my camera around. Maybe you guys can see it a bit. Hold on. Very difficult. I would let you multi-stream to IG like you do every other platform. Okay, hold on. Give me a second. I want y'all to see this. Give me a second, you guys. Sorry. Okay. No, go away. I don't want to log into my account. No, I don't want to log into my account. Go back. If you want to try to do your own chart markups, you can just go to tradingview.com. They do allow you to create free accounts with them, but I have a lot of markups on mine, and so I don't want to pull that out. I want to show you the markup itself. So give me a second. If it will act right, we can get this done. The ticker is CCL. Can launch this chart. Hope y'all can see it. And this is something that I go over with you all in class as well, like understanding how to do simple markups. I show you the full walkthrough of what all of this is, understanding candlesticks, chart patterns, all of those things. So down here at the bottom, which I don't think you guys can see too well. Okay, down here at the bottom is where the years are. So what we're going to do is we're going to pull them over so that we can get an overall picture of how Carnival Corporation has performed historically in the market. Okay. So let's see the last time that their shares were this low. And then what you want to do is you want to pull up articles and see what caused that as well. If you want to be an extra nerd, you can do that. Okay. All right. Perfect. So what I love, I wish I could zoom in for you guys some more on the computer. So try your best to kind of see this. I'm so sorry. It's not going to allow. Ooh, yes, I can. Okay. What I love about marking up charts is that history will literally repeat itself. And so this is so important. All right, so we're going to go grab our horizontal tool here, a horizontal line, and we can see that where price currently is. You see this kind of like red dotted line right here? Okay, so this is where the current shares of the company is at $8.83 per share. And so it has this kind of dotted line here, but we want to go ahead and place us a solid line on top of that because that's where price currently is. Now, if you can see this, history always repeats itself. It's just phenomenal how this happens in the market. This is present day. We're going to scoot all the way down here. The last time the market has gotten to this level was in 1994. Do y'all see that? Let me remove my banner. It's probably in the way. Let me remove my banner. And then I'll just make this full screen. It'll take me out of the picture. Can y'all see that, what I'm showing you? Y'all see where it says 1994? That is the last time that price has hit that respective space, okay? That particular space. So then now we're going to go try to find some areas of commonality when we're talking about looking at your levels of support and resistance. And if you're like, I have no idea what the heck she's even talking about, I go over this in the stock class. It is pre-recorded, but it's broken down like a course. So you can do it self-paced and you can understand how to do these certain levels in the market, okay? All right, perfect. So what we're looking for is to see if the shares with Carnival continue to drop, where will they potentially go to? Or what it would look like if their shares go in a bullish direction. Okay. So if the company starts to perform bullish, what are we looking at? All right. So we're just gonna drag our line up and we're gonna look for areas of commonality. Okay. And then we can place us a line here. Now, what I like to do is I try my best to go based off of bodies or ends of wicks. So we can see that right here. Okay, we have it here where it's hit this particular area and the market has made some decisions. And we go all the way back and we can see that it's done the same thing in that same range between 1994 and 1996. Okay, so if you're someone, and this is exactly why. Hold on, let me see. I know that this is kind of a lot, but the reason why this was said in the news articles that I was reading, that the shares of Carnival has the potential to go to 12, I think it was like $12.70 some odd cents by 2023 of next year, is because when you look at the technicals, you can see that history does tend to repeat itself. Okay, so this is why when people flip under the hood and they make these type of suggestions, this is what we're looking at. If you want to know when people say different type of price predictions with certain shares or certain companies, they're looking at the technicals of the company. They're looking at respected levels in the market. And then that's where they're determining, based off of that analysis, where the market could be potentially going. Okay. So for those of you who are invested into Carnival, if you're in it for a hold, that was just a quick markup. I don't want to go too far into this. Let me get back to the screen. I don't want to go too far into this because then I'll have to start breaking out other forms of measuring the market. And I'm not trying to do that right now at 11 o'clock at night. But I wanted to see what that was looking like based off of what some of the news articles were suggesting about Carnival shares. Now, if it gets to this respected level come October of next year, what you'll have to look out for is how the economy responds to the official recession, because a lot of CFOs came out, as well as different companies like Apple, Meta, Google. All these companies were coming out and saying, we're not really going to feel the true effects of the recession until next year. So it'll be very interesting for me to see how all these transportation companies and all these cruise line companies are going to respond to the market. It's going to be very, very interesting. Angel said, is it a paid course? Yeah, it's only $59. That's it, Angel. So you get like, everything in it and the resources and all that. So I just thought it was interesting. I wanted to dive under the hood. I'm really, when I hear everybody say that, oh, it's on sale, go get it, it's on sale. What does sale actually mean? Because if a company is on sale and they're going broke, is it truly a sale? Is it truly a sale? Because if they can't come back from it, what's the point of investing? You're just going to continue to lose money. And I don't want you guys to do that. I want y'all to start looking at these companies less from a consumer standpoint, more from an investor standpoint. Just because it's cheap doesn't always mean that it's sweet. So if you're going to invest into this, understand that it's probably going to go up to $12 per share sometime by next year. If that happens, that may be a good time for those of you who are not looking to be long-term investors. But if you're planning on holding on to Carnival for a while, then it's going to be about a 5 to 10 year play. Now, what you have to ask yourself is, do I want to invest into something that's $8 a share that has the potential to go to up to $12 a share in a year? Is that worth it for you to invest in? Where you have other investment vehicles that could be giving you greater returns with compounding interest, potentially greater returns with compounding interest. These are the things that I want you to think about. I know that I did a live when I talked about investing into livestock. I talked about investing into lands and different things that you could do with that and get the returns on that. So just be strategic, just be smart. I wish you guys all the best in the market. If you want to take the stocks class, it's already pre-recorded. It's packaged up for you. I've taught this class 3 different times live. All the recordings are on there. You get all the resources, everything. So if you want to take the class, if you comment stock on Instagram, if you guys comment stock, you'll be sent the class directly and you can just go ahead and start taking it. Just to let you guys know what comes in the class itself. Okay. The things that you're going to learn stock terminology, fundamental analysis of the market, technical analysis 101, basic structure to get you going, trustworthy brokerage firms, whether you are national or like stateside or international. Okay. You're going to get a walkthrough of how to open a self-managed portfolio. I'm actually giving you guys a look into one of my personally managed stock portfolios. And I do this for one main reason. I want you guys to be able to see what a self-managed portfolio looks like. Because if you go to your bank and you say, hey, I want to open up a portfolio of different stocks, they're going to ask you to have a minimum of $10,000 to $25,000 to open those portfolios, because they're paid off of your portfolio to manage it. But you can open up your own self-managed portfolio. It doesn't have to be through Robinhood. Please, there's more reputable brokers out there. If you're international, you can still invest into US stocks. Some stocks like Shopify work for both the Canadian exchange as well as the US exchange. So you don't have to worry about any conversion fees there. And I really encourage you guys to take control over your portfolios. Okay. So come off of Robinhood. It's just a personal suggestion. You don't have to listen to me. Go with more reputable brokers like Fidelity, Charles Schwab, Vanguard, TD Ameritrade, those type of brokerage firms who don't have as many issues with the Security and Exchange Commission. Robinhood runs into issues all the time, and it just stresses me out to see people constantly getting taken advantage of, I feel, by Robinhood. Okay. So you're also going to learn when to sell, how to sell, the taxes that are associated with stock investing, and how to properly enter into a buy if I didn't address that. So, and then the last thing that I cover with you guys is that if stock investing isn't for you, because it is very risky. I'll tell you in just a second. So Angel from YouTube just asked, how do you transfer your stocks from Robinhood? Hold tight, Angel. I'm going to get to that question. That's a phenomenal question. So if stock investing isn't for you, what options are going to be better suited for you? Not everybody has time to study the market. Not everybody has time to get up and read the fundamentals of what's going on in the economy to determine if you want to stay in this particular investment long term or if you should be looking for an exit strategy. Not everybody has time to be looking into the technicals of companies. It is a lot of studying. Okay. I don't know a true investor who invests on the riskier side of investing who has not spent 2 to 3 years at minimum understanding and learning the market. Okay. So I want y'all to, if you're going to take the class, it's going to give you a very, very good breakdown of all of these things without the confusion. I've loved the reviews that I've gotten back from that class. So I really hope that you enjoy it as well. And I do not trade options for those who ask. The type of investing that I do, I invest long-term passively. Okay, so I do have my index funds. I invest aggressively in certain stocks. I invest in the foreign exchange market, so I do day trading within that. And then I also invest in crypto. Okay, now the reason why I don't talk about this a lot as far as the cryptocurrency side is concerned is because there's a lot of people out there who scam on behalf of my name under cryptocurrency. So they'll be like, oh, we'll get you all this high return on your investments and all these things. That's not me. And so because I don't want anybody getting scammed off of my name, I don't talk about cryptocurrency a lot because I don't want them leveraging that to go and scam people, because that's literally all that they do is DM people about investing into crypto. Okay. So to answer your question, let me go over here. To answer your question, the question was, how do you transfer your stocks from Robinhood? Perfect. So let's say you decide you want to go and open up an account with Fidelity. Okay. Robinhood is going to charge you $75 when you do a transfer. So whether you transfer partial shares or you're transferring full shares, they're going to give you a $75 fee for that. If you transfer your shares into Fidelity or Charles Schwab, they will give you back those $75. Now, what I would suggest is you give them a call, let them know you do have an account with Robinhood. You want to move those shares off of their platform into your new portfolio. They will assist you with that process, and then they will reimburse you the $75 fee that Robinhood does assess. The reasons why I do not care for Robinhood, I need you guys to know this. Okay. The reasons why I do not care for Robinhood, they, on an integral level, it's when you do your transfer, Angel. So if you want to transfer all of your shares out, then it's just going to be $175 fee. It's not per individual stock. Okay, so Robinhood has gotten to issues with the Security and Exchange Commissions for multiple reasons. One of them is not being transparent in what they do with their consumers' information. Another reason is they were saying that they were a free platform when all actuality they were not. They were selling your personal information and not being very integral in that space. Another issue is that when the economy took its original hit because of the pandemic in 2020, Robinhood ran out of money essentially to fluctuate in the market. So they bottomed out, and a lot of people were getting locked out of their accounts. People couldn't close out of their investments, which brings me to my next point, is that Robinhood is a third-party investor. So if you want to invest in a particular stock, let's say you want to go invest in Carnival, let's just say it because that's what we're talking about today. Let's say you want to go invest in Carnival. They pick up the phone or execute it on their computer with another brokerage firm that, hey, this person wants to execute this investment. So when you want to go and sell your shares, there's a delay that you may or may not experience because they have to then go and take that order and execute it with the broker. Whereas if you're doing it with Fidelity, Charles Schwab, Vanguard, TD Ameritrade, they are the broker. You don't experience those delays. Okay. And that's my personal reasons for not caring for Robinhood. They did have issues with their cryptocurrency platform where they were telling people you're invested into crypto, but you really weren't invested into crypto. You invest into Bitcoin and stuff, and it would be the face value of Bitcoin, but you could only sell it. You could only sell it for US dollar, which was not the purpose of investing into cryptocurrency. The purpose of investing into cryptocurrency was to get away from being invested into the US dollar, right? And so it was a lot. But they eventually switched over their crypto, so where now you're actually invested into crypto. Like you couldn't even transfer it, you couldn't put it on the wallet, you couldn't do anything but sell it for US dollar gain. So yes, for those reasons, I do not like Robinhood. I feel like they're Robin the Hood. I feel like they have Kool-Aid with no sugar, peanut butter with no jelly. I don't like them. But for all of you who like Robinhood and is doing good for y'all, I'm so happy for you guys. Okay. All right. So that will wrap up what's going on with Carnival Corporation. If you guys want to see what I was looking at, I can send you the link of what I was looking at for the company. There's so much more stuff that you can look at in regards to it. We looked at their earnings. We could see that they're not projected to get out of debt until 2023. We looked at their company valuation. Their company valuation is currently around $2 billion, but they're also $9.5 billion in debt, which is ridiculous. And so it's suggested by just market analysts that if you're currently invested, you hold. For those of you who are determining if you should get into this particular investment, at best, they're saying that it's probably going to get to around $12 and some odd change a share by 2023, like October 2023. So right now, they're being around $9. Is that an investment that you really want to get into or married to for an entire year for, let's see, 8, 9, 10, 11, for a $4, I think it's $4 gain per share? Totally up to you. If you're planning on holding this for 5 to 10 years, then it may be a good investment for you long term. But for me, I'm actually going to wait and I'm going to continue to see how the company performs, because I was reading, you can look at their quarterly earnings reports, and in their quarterly earnings reports, they will tell you like what's going on with the company, why they're struggling. And one of the documents that I was looking at suggested that they still have not bounced back from the pandemic. And then they got hit with the recession. And then they got hit with inflation. Then they got hit with higher cost of oil from the war. So it's hard to get out of debt when you're constantly swimming upstream. So I'm going to wait. I want to see how the company responds. And then I'll make the determination to see if I'm going to invest in it. So that's that. I hope you guys get you take the class. The class is $59.99, but it is self-paced. You have all the resources that are available to you. And yeah, I wish y'all all the best. And for those of you who don't know, I am having my very first event in Atlanta, Georgia, February 25th and 26th of 2023. We have a phenomenal list of speakers who are going to be at the event. How it goes is we're going to be talking about breaking past any limiting barriers that you have, getting your life together financially in the lane of money management, credit, taxes, real estate investing, stock investing, and life insurance. And then we're going to go into leveraging social media to create additional source of income with an online business. And I'm going to give you the rundown of how I've been able to leverage social media, everything that I've done to really grow my brand and develop my brand and create a full-time source of income that actually very significantly beat my salary as a banker. So it's going to be a lot of fun. I just can't wait. It's just going to be great. So it's a 2-day event. There's tiered tickets. It is on pre-sale right now. So before everybody gets their speaker flyers and all the ads go out and all that stuff, the event is on pre-sale, and you can read more into that with the link in my bio. I'm going to bed. I got to get up for the gym in the morning. I will talk to you guys later. So we'll be able to buy the recording of this event if we're able to come. So the VIP tickets will get the recordings of all the speakers. I don't know if we're going to make it available as an online situation because we really want people to be there in person. It's going to feel like it's going to feel like you're there with your cousins at a cookout, but you're also at Sunday church, but you're also really getting filled with education. That's what it's going to feel like. It's going to be a really good time. And I just can't wait to see the people who are going to go out and do amazing things afterwards. Will that event be available to purchase after the event? What do you mean, will that event be? I'm confused. Oh, so the December 10th event was postponed to February 25th and 26th because people were like, they really wanted to come, but they can't make it out because of the holidays. So the team and I got together. We made an executive decision that we are pushing the event back to February 25th and 26th, which is awesome because the speakers, y'all are going to be so happy. I can't wait. All right, y'all, I'm going to bed. I got to go. I got to go to the gym in the morning. I need to get some rest. So talk to you later. Hope you guys enjoyed this live, and I'll see you tomorrow on the socials.